guys, welcome back to FX Rhapsody. Today we will be looking at the British pound, Japanese yen, and also the British pound, US dollar. Before we get started, just go visit my website, guys. COT reports is updated. I'm using the COT reports together with my analysis just for more confirmation of where orders is. And like I said, COT reports is very important, especially when you are looking at a bigger time frame, just to see the momentum in the market. I mean, that's where COT reports shows you all the orders that's in the market from the big banks, central banks, and also those big institutes. I mean, those are the guys that's driving the market and price, and it's just good confirmation from them just to see the buyers of being a long or short market. On the website, there's also a lot of other information there. My preferred brokers is also in there. Go check them out. There's also other resources to download, and also my video categories. It's easily it's categorized there. So if you are a new trader or just whatever you want to view, being it analysis, strategies, or whatever, just go click on those trading videos, those categories. Okay, so let's get stuck into it. GU. Now on a monthly time frame, what we can see is we know that there is still all this buy liquidity that is here at the top. Big liquidity lying here. Price did not or has not yet pushed into that, taking that out. It has bounced off this big resistance at the top, and it looks like price want to start moving down. So that all depends on price, on the British pound, how weak or strong it will get against the dollar. And with that is where you start using your COT reports just to see the longs and the short in the market, just to see if they are going to push price up through this entry here or through this zone. Just go tap that out. But for now, let's just follow price action. So on a weekly time frame, the weekly time frame, what we can see is I did a small analysis in midweek, so just go have a look at that. But basically what I did point out is you can see this area of support, or basically this is where the buyers climbed into the market over on this side here. So I mean, with them climbing into the market, they left this huge area of left this huge area of liquidity behind with their stop losses that's sitting at the bottom. So basically you could see here that price on a weekly time frame, price came and it went and tapped into that. And this is price action, guys. As soon as price moves down, it will always hunt that liquidity, that buy or sell orders that's lying just below. Their stop orders, their sell stops, that will just not sell stop, sorry man, the stop losses that's lying at the bottom of their entries. And this is what smart money does. The big banks knows this, and they push price down, and it comes and taps that out. And and then when you can see that with that candle, and once it tapped it, it started moving up. Now another area of interest was going to be, or was this area, like I said, I did this analysis in the week. This is where more stop losses or more liquidity is lying in the market, in this area here, being some buy stops lying in the market. So price came up like price action always does, and it went and it tapped that area. With that wick, it tapped into those stop losses and those orders that's lying there, and that liquidity. And after it does that, this is where it gets interesting. So now price might carry on to the upside, or it might now go and fall. So let's just go down to the daily time frame. So on a daily time frame, let's just expand this a little bit. So if you look at the naked chart, you see price coming down from this high to this, and it pushed down all the way to this low. This low being that the candle on the weekly time frame that tapped into that liquidity, and then once it tapped, it started pushing up to the upside. Now if we take our Fibonacci from the highest high to the lowest low, there you go, for week to week, you can see how price came down and up, and this is always this is always key area, this 62%. This 62%. That's always a nice entry point, and you can see how price came and it bounced off that area. Now we're expecting price to obviously move down after that 62, after retracing back to that 62%. But guys, this is Forex. Do not assume that things are going to happen this way. This is a higher time frame on the daily. Now, the way that I analyze my monthly, weekly, and daily, you do the exact same on the lower time frames, being your 4 hours and your 1 hours. Just take the same way that you analyze and that I analyze here. Just draw down a couple of time frames and then do the exact same. Go from the high to the low. Use your Fibonacci. Fibonacci is not a magic tool. It just outlines to the areas that price action likes to go. I mean, the 62% is always a good retracement. Then you look left, you can see this. There's a little area of liquidity that's lying up here. So what I'm saying is, there on the 70.5 is always an optimum entry point. So this is an area where liquidity is. So for now, it looks like price has tapped the 62, but price can easily just do that and then come up to tap that liquidity out by the 70%, and only then start doing its rounds to the downside, then only turn. So wait for that swing high or swing low, go down to the smaller time frames, and then yeah, wait for your setups. Guys, be patient, do not just enter. Like over here, do not just enter because we see this bearish candle in the market in between the bulls and you think, okay, this is where price is going to turn. Do not do that. Be patient in your trading. Go down to the lower time frames, wait for that confirmation. And but yes, now on that, let's just go to the COT reports. Let's just see what the orders are saying. So basically what we see here is, a lot of guys have asked me also how it works. So if we look at the 15th of June, you can see the net position is 32,170, meaning there's 55,000 longs, 23 shorts. Now on that week, you can see the next week being the 22nd, you can see how the longs have changed to 51,445. And the shorts have changed to 33,500. So basically what happened here is there was a change in longs, meaning that they took a lot of longs out. They closed their long positions and they added short positions, making the net position lower. So it went from a 32,000 to almost basically 18,000, meaning that more shorts were put in the market for the big institutes, meaning they are trying to push price down. You can see this downward movement. I mean, if you have to go down to your, or when you go down to your monthly, just go and have a look. Pushing price down, and then price came up a little bit, and then all of a sudden here, mid-July, like now, I mean, it went from 21,900. It's sitting at minus 5,684. So basically, a lot of longs have been closed. A lot of shorts have been put in the market. So you can see that big banks and institutes are trying to push price down. And again, let's go to the monthly. Let's just take this out. So looking at that and looking at your monthly time frame here as well, being that area here, they are gearing up for this push to the downside. So the big banks and institutions, they want to push prices down. So yes, that's how you use that COT report in conjunction with your analysis. Right, let's move on. Okay, British pound, Japanese yen. On a monthly time frame, we can also see this very similar to GU, same area of big liquidity lying in the market, meaning that has not been tapped yet. Will they push price up to this area to go and tap it? Will the price go down? So again, just can't trade on the monthly time frame just like that. Drill down to the weekly. Let's see what the weekly tells us. So the weekly, again, you have this area here at the bottom. Whoops, so lazy. You have this area here at the bottom. So basically, we saw a lot of orders, or buy orders were placed in the market, pushing this price up. And with it, buyers, those sell stops are lying at the bottom. So basically, the big liquidity is lying at the bottom. Price came down, like price action always does, comes and hunts it, and bam, taps into that liquidity with, again, that wick that's there. So on a weekly time frame, obviously in the daily it looks a bit different with candles, but on a weekly it made a little wick, basically just tapping into it, and poof, shot up again. Let's look at the weekly, the daily time frame. So on the daily, again, it's very similar to GU, but I'll show you the difference now. So basically, again, price came down. Let's take our fib. There's that nice down candle that tapped into that liquidity. After it tapped that liquidity out, if you look left here, that all those orders lying there, tapped it, shot up again. With the retracement, price came up. It went a little bit past the 62%, but again, it's now sitting here. It's on the halfway mark. It did basically tap out or come into this liquidity a little bit, but we've got all this liquidity lying there, lying there, lying there, and obviously all the big liquidity that's at the top there. So again, is it a case of price now tapping into it, going down? We cannot do this just on the daily. What we do is we drill down to the 4 hourly and 1 hourly and check it out, wait for confirmation, do exactly the same analysis, wait for price to come into your zone, be patient, plan it out, and stick to your analysis. Let's look at the COT reports. Now we do know that the British pound have been closing their shorts, their longs, adding some shorts to the market, meaning they are pushing price down, like you saw here. Price was pushed down to the downside. There was a little bit of incline in price, but let's have a look at the Japanese yen. Now, in order for price to keep falling down, okay, so basically what happens is if the British pound, if the British pound gets weaker, which is that, it means the Japanese yen is getting stronger. Okay, so Japanese yen is pushing the price, So let's have a look here. COT reports the Japanese yen. So what it does is, or what it's currently doing is, it went from a negative 69 to negative 56 to negative 55 to negative 59. So basically the British pound is dancing around this area as well. So, not the British pound, the Japanese yen. So it's dancing in. It's still a little bit weak. They are pushing the price down, pushing the price up. So basically, let me just go back again. So we can see a weakening in the Japanese yen. A weakening in the Japanese yen, meaning the price is then going to start pushing up. So as soon as the price weakens in the Japanese yen, it will definitely start pushing the price up a little bit. So this is now where we look at what will be the best currency or the stronger currency between the two. And that is what we need to look. And just have a look at your price action. Just see where it's going to go. I mean, it has been tapping out. So again, there's lots of liquidity lying at the top there. So guys, I hope you enjoy this video, this analysis. So if there's any questions, guys, just don't hesitate to ask me. Just go to my website. There's my Telegram links also in the description of this video, Telegram links, and then also you can contact me there. On my website, I've got an email address that you can contact me there as well. And guys, just stick to your analysis. Don't be hasty on your trades. Don't have that FOMO, that fear of missing out, guys. It's always don't just place trades in the market. Don't just go and place a trade in every hour. Just wait for your setups, and the more patient you are in your setups, the more confident you will be in placing them. And once you place them, just obviously use your risk to reward ratios. Guys, I hope you guys are having a wonderful weekend. Guys, I need you to stay safe. Like this video, comment in the comment section, like I said. Just subscribe to my channel. Click that notification bell as well. There's more videos coming your way. And yes, again, hope you guys are staying safe. Happy trading, guys.